Hello, everyone. It's Modified Darvas Box MDB coming at you with a video, first video in a while. The last one I did was in early January, I think, and since then there hasn't been a lot to talk about. It's just been a powerful bull market, up every day. What's there to talk about when there's some great stuff going on? But now I think things are changing, and I wanted to do a video and talk about that. Okay, for people who don't know who I am, I'm a guy who created a system based on this book, How I Made $2 Million in the Stock Market by Nicholas Darvas. It's a great book, investing book. Look it up on Amazon. I suggest you read it. Um, Basically, I look for bullish Darvas box patterns that look something like this, and I try and short, but mostly I avoid bearish Darvas box patterns that look like this. Basically, I avoid them because I'm kind of bad at shorting and betting against stuff. I'm bullish at heart. But so, anyways, that's kind of the gist of the system. If you don't know or haven't seen stuff on Twitter and things like that. So let's get into it. So basically, the reason why I am doing a video is because I am now bearish on the stock market indexes. Now, I'm not bearish on individual stocks because I don't see a lot of problems with the individual stocks, but I do see problems with the indexes. And I think the highs for the indexes are in for probably maybe the, I don't want to say the year, but for the near term, we'll call it, maybe the next few months. And the problem with saying stuff like this is that next week everything could be higher and this will all be invalid. I don't know. Beats me. I don't know. But usually, in hindsight, you know, maybe 3, 4 weeks later, that's when okay, that's what happened. But I just feel strongly about this, so I wanted to make a video on it. But again, indexes I'm bearish on. Individual stocks, I don't see enough yet to really turn on those at this time. All right, well, let's go into a little bit of why I'm bearish on indexes. Let's see if I can find this picture. Okay, we've had an amazing bull run since September, October. It started. Man, stuff just goes up. The S&P 500 goes up every day. It's been wonderful if you're along. Well, the funny thing is our good buddies at the Fed have been the enablers of this. I think we should all be sending Jerome Powell Christmas cards. Thank you, Jerome. You're incredible, etc. Because look, here's a chart of all the Fed money that's been going into the system, and it's funny, they'll deny, oh, we don't push stocks up, but what they do is they give the money to banks and other things who then do push stocks up. Because if you're a bank and you just got a slug of money, what are you going to do with it? Well, you're going to put a big chunk in the S&P 500 or the Nasdaq or something like that. So you can see it's been a great period here money wise, but could things be slowing down? Yeah, and if this slows down or goes flat, well, then we're going to get back into a quote normal market. And normal means if bad things happen, stocks do go down. Here's a picture of this side by side. I'll post this later. I just thought it's a good correlation picture. But which stocks and everything does the money go into? Well, that's the job for us to figure out. But here's what got me really worried was Apple. Let's see, do I have this? Apple's a giant company, and they just gave a profit warning based on the coronavirus stuff. And that's my biggest fear from the virus thing is the economic impact of it, the unknown economic impact. And we stick to what we know. We know that, China is really struggling economically. That's got to impact the US, right? Well, maybe. The Fed has given us so much money that bad news is not getting priced in the way we'd like it to. This year is where the news of the virus first broke. Some smart people sold, but they were overwhelmed by buyers and the continuation of the bull market. Well, this circle day is when Apple warned. And let's see, wait, Tuesday. Oh no, I'm sorry, I'm wrong on the circle. But Apple warned, and the market didn't even really go down. It hardly blinked, and then it went up afterwards. So clearly, the market doesn't care. But here's the thing: eventually, all this stuff catches up. And yes, people will say, "Well, price rules." Well, that's true, but when people like myself who have an idea of how of the pricing, the inputs that go into stocks, that's when people like me get worried. And I know people have been getting worried. I started getting worried a little back here when the virus thing first hit, and a friend of mine told me to not be a spaz and to chill out. And you know what? He was right. There was a lot more money to be made being long, but now I think things are beginning to turn, and I feel strongly enough, which is why I wanted to make a video. All right, let's go into this here. Here is the S&P 500 estimates. The last update we had was February 14th. And I'm waiting. That's been almost 10 days. I keep waiting for more updates, but they're just not coming. But you can see we went from single digit growth and we're now getting into double digit growth. That's part of probably why the Fed put all this money into the system. We wanted to get more growth. Whoopsie. We wanted to get more growth on this. And it worked. Look, we do have more growth. But here's the unknown thing. I keep waiting for updates because what if these numbers go down? And what if these estimates get chopped because of the China thing? We just don't have enough data. But the problem I see it is today, and this is as of Friday's closing, is this 24 PE. This is a pretty high PE number. And you can see historically, it's been pretty much a guardrail. We've only been at 24 PE a couple of times over the last decade. In 2016, which was not a fun year. This year, at the very end of 2017, call it early 2018, right there. But all the rest of the time, we haven't gotten this pricey. So right now, I can argue that valuations are pretty extended. In fact, the last time it was really high here was the 2008 2009. It's like, oh my god. So from a valuation standpoint, yeah, the market's pretty highly valued, which means it's got to deliver on these numbers. But what happens if these numbers get cut? I just don't have the data to show it. And that's one thing that worries me is that the market's going to price in, and I think it's starting to, potential cuts to these numbers. And these are the inputs that go in, which help determine whether the S&P 500 is going to go up or whether it's going to go down. And we started to see it here. A couple of down days in a row. QQQ volumes. Look at these volumes, man. People were just blowing this stuff out. And could it be because they see a future which is less, let's say over the next 3 months, less than what it is today? With the coronavirus news, I could easily see that. So again, it's the economic impact of corona which is scaring me more than anything else. And it's just because we don't know. But so my conclusion based on this is, yeah, maybe it's time to take money off the table. Maybe it's time to cut positions, cut position sizes, and get a little more cautious. Um, I do have I bet against the indexes, so potentially we'll see how it plays out. The other thing which making that kind of a bet is that, yeah, if I'm wrong, I'll know pretty soon and I'm not going to lose a lot of money. I don't see a lot of shorts in individual stocks. In fact, I can't seem to find any at all, except for Roku. I think Roku is a short sell, or at least a bearish one and avoid. It reported earnings, went up. No, it just couldn't hold it, couldn't hold it, couldn't hold it. And their Roku's info here, it's not even working here. Oh, I'm on the wrong sheet here. Here we go. Roku. And these numbers, look at this. Just just you get nothing as a long. The company is delivering and it's getting new accounts and all that. The problem is that at the current valuation, it's not enough. That's in my opinion on Roku. But everything else looks okay. Like Dexcom, yeah, that one's looking pretty good. Tesla, what problems here? You know, stuff like that all looks good. You know, AMD, well, AMD right there. But you get the picture. Individual stocks aren't showing a lot of problems. So that's why I've targeted the indexes. Here's one which has been going up. Gold. Gold is a measure of fear. Yeah, you know, if you read the headlines, yeah, you're frightened. So that's a potential problem, and people are buying gold, you know, because they're scared of the future, and so I think it's good to be cautious right now, and and just don't do anything crazy on the long side. So you get a combination of valuation, you get a combination of the long stock run, and then a combination of unknown news. So yeah, maybe it means time to take a little bit of a break. Go on vacation, go fishing, do like Jesse Livermore or something like that. So that's what I wanted to make a video on, and we'll see what happens in the weeks to come. All right, hope you have a good one. Thanks, bye.